welcome to Camel Finance. I'm your boy Camel, and for those of you that are interested, fishing went well yesterday. Caught a bunch of fish, which was cool, although nothing big enough to bother showing you a photo of or take home and eat. So anyway, it's nice to get out, it's nice to sit on the beach, it's nice to cleanse the soul sometimes. Of course, everyone is dying to know what I think of CPI, so we're going to do that. I know a few people found it a bit confusing that I just went fishing on CPI day, but for those of you that know, right, I don't trade CPI. It's just a game of chopping around and trying to shake people out and trying to trap people and blah, blah, blah. So we don't have to worry about that. Long and strong continue to push, and we'll let the dust settle as always. So let's get into today. Just in the interest of catching anyone up that is unfamiliar with my idea was that anything you do to the M2 rate of change presents in the US CPI data with around an 18-month lag. And since we went down, had this sideways wobble, this is throwing me off, why is it lagging, and down, I was expecting to see a down, sideways, and down in the CPI data. And we had been using Trueflation to track this in real time, and we had done a really good job, right? We had followed this thing all the way down to the bottom, then we knew the thing was going to go sideways, and then we were saying it should probably start to break down again, and at the hard right edge you can see for Trueflation, it indeed did. We started to see that third and final leg down. All of this looked like it was going to work just fine. So happy days. I was saying all of this feeds into my idea that we're going to have this big boom and deflationary bust. And this whole idea was that, you know, we would see this big parabolic blow off top followed by a big deflationary bust, or rather a big stock market meltdown that would actually see the CPI data slip into negative. So this is different from disinflation. We were talking about negative inflation, aka deflation. And so all of that was working really well until last month's readout. Now, at last month's readout, we had a massive divergence. We had this somewhere in the 1.3 to 1.6 neighborhood, and the government reported rate came out at 3.1. So in last month's print, we were saying that this is the first time we've had a massive divergence like that since the top. Remember, at the top, Trueflation had us at around 20%, whilst the official government rate was only around 9%. So the government tends to understate inflation at the top and apparently overstate it at the bottom. Like I was saying, we haven't seen a divergence between Trueflation and the government data this severe since the top. As of last month, you know, we got that divergence. We were sat here at 1 point something for Trueflation and 3.1 for the US. And I was saying, okay, well, all we can really do is see one more set of data. If Trueflation starts to creep up, maybe we could expect to see higher CPI print from the government data. And if it continues to trend down and roughly sideways like it did, then that would tell me to keep an open mind about, indeed, this thing right here playing out and us getting that third and final leg down to show up in CPI. But as I'm sure you're aware, we have now had two consecutively hotter CPI prints. So the CPI came out again. Headline is hotter than expected. It's also creeping up. Of note here, though, we are still seeing lower core inflation compared to last month's data, and this is the Fed's preferred measure of inflation. So a lower print supports potential rate cuts later this year. Time will tell as always, okay? Time will tell as always. Speaking of rate cuts, we have put a 99% probability that we're going to be paused in March. Not really a surprise, that's only up from about 97% before the CPI data. We have also, almost certainly at this point at least, confirmed that we are not going to see any cuts in May. But clicking out to June, you can see still around 35%, and if we do a compare, then you can see only marginally higher than the 30-ish% that we were at prior to this hot CPI print. And if I click out to July, you can see we're still in that 15-ish% neighborhood. We're about 17% as of the time of recording, and we were at 13% before this CPI print. So overall, not too dissimilar. Still tells us to keep an open mind about seeing cuts as early as July, assuming nothing breaks in the meantime. So of course the question is, are they manipulating it so they can keep the rates higher? Maybe, okay? I don't want to suggest anything like this. I do personally not trust the US CPI data. I have never trusted the CPI data, so that's not an inconsistency or a flip-flop from me. You know, I've been using Trueflation the entire time because I trust Trueflation more than the government. I think if you ask yourself the question, who is more incentivized to lie, then you have your answer, right? Particularly as it's an election year. And given that is indeed an election year, I trust the data from the US about as much as I trust that from China or Zimbabwe. But we kind of have to take the data as what it is, right? It is what it is. What are we going to do? We can't really do anything other than take it at face value and try to work around that. Remember, we have seen China slip into deflation. Perhaps that is an indicator of what's to come. We're also slowly getting there in Europe, okay? But it does beg the question, are we going to have a 70s repeat? And I've shown this multiple times. This was the plan before we moved to deflation, and now it appears we might have to go back to this double pump idea, right? Are we going to have to do this double pump? Maybe. There's a lot of talk of stagflation going around at the moment following this hot CPI print. Stagflation, by the way, essentially means weak economic data, weak economic growth, weak employment numbers, and persistent inflation above that of the rate of economic growth. So are we going to get stagflation? Maybe, right? I'm seeing a lot of people talk about this. And again, we've got the dark blue. This is the current CPI. And a lot of people like to show this double pump that I just showed you from back here down the bottom, the 70s. So a lot of people are focusing on this. Is this something we're going to have to entertain? I would argue this time around is quite different, okay? Note the setup in the 70s. You've got CPI in red coming down, PPI here, both above the zero line, right? And now look at the hard right edge. CPI in red, as you can see, and PPI in blue doing potentially this, looking to roll over, okay? Is that coming? Is something like this just around the corner? We're going to find out. In the interest of fitting a narrative to my bias, I got hold of the CPI data and I had a look through here. And it is worth pointing out, right? Inflation is practically gone from almost everything apart from energy and shelter. And so we're going to continue to take a look at this, right? But pause your screen, take a good look, right? At the hard right edge, take a look at the February numbers, okay? Really not a great deal of inflation. The energy doesn't make sense at all, in my humble opinion, because oil hasn't really moved and neither has nat gas. In fact, if I pull up a chart of nat gas, okay, have a look at nat gas. Does that speak to inflation to you? Because it doesn't to me personally. If we look at the oil chart, it is more or less in a trading range, okay? Very slight uptrend, but it's more or less in a trading range going back to the end of January. So is this really something that seems completely legit to me? Not necessarily. Food, as I showed you, particularly in many places like Germany, continuing to come down. So we'll see, right? We will see. And then, as always, the shelter is the one that's really being the problem child, right? And the issue with shelter is it lags massively, doesn't it? If we have a look at shelter, okay, the CPI, from the BLS, the Bureau of Labor Statistics, in orange, you can see is significantly above that if we use the Zillow rent index. So again, we continue to see this kind of weird lagging effect. We continue to see shelter causing the CPI to remain sticky, even though it shouldn't at this point because it's such a lagging component. And in amongst all of this, the labour market continues to cool massively. Okay, job creation plans in orange below the 2019 average, and openings hard to fill in white getting that way as well. And remember, all of this against the backdrop of them continuing to release jobs and jolts data only to come out 2 weeks later and revise it down, which they have done, by the way, for 8 out of the past 10 jobs reports. So Labour is definitely not looking good, right? They're trying to present the Labour as if it's okay, but it's actually quite clearly not. We've also got inflation that in theory is not as bad as it looks. However, again, they continue to present it as sticky, perhaps to keep those rates high for some time longer. I wonder if that is somewhat tied to the BTFP thing we were talking about recently. And all of this at a time where, remember, the first time we saw this divergence away from the US government data in trueflation since the top, they just so happened to change the way they calculated the basket 2 months ago. So there's some weird stuff going on, right? They did the exact same thing at the top. We got to the top and they changed the way they calculate it so they could under-report the inflation. And now they seem to have changed it so that they can overstate the inflation. It's a pretty weird situation to be in. Like I said, I guess we have to be open to this whole stagflation double pump idea, but I don't really like it because of this stuff with the PPI as well. That setup at the hard right edge is not good. Like I said, we've got this labour market softening as well. And all of this tells me to keep an open mind about continuing to see this thing play out. So whether I end up being right for the wrong reasons or whether I end up being wrong for the right reasons, you know, unless this thing is invalidated, unless this parabola starts to go sideways or down, then I only can really continue to let the charts tell me how to position, right? I can only really stick with this as the base case, even though we've probably got some issues with the CPI. Like, I'm probably not on top of the CPI in the way I thought I was. Maybe we can, out of the blue, see a revision in a couple of weeks downwards. Maybe what we'll see is deflation catch up at some point. Maybe this portion will indeed manifest at some point in the not too distant future. All of this is going to be left open for discussion and debate for the time being. As I said, I don't think it changes the course of action very much in terms of the stock market. At least we're going to have to see major trendline violations, right? Something like this, a breakdown of here, for me to even entertain that this thing is broken. And we are in that neighborhood where we should start to see an acceleration to the upside. All the while, risk is clearly coming on, okay? Bitcoin is clearly breaking out. But this whole labor market thing does tell me to keep an open mind about seeing some kind of crash later on in the year. Now, again, I'm not calling for it as ever, one day at a time. And as I've been talking about, we'll keep trying to nail down the gains first, right? Let's get underneath the squeezes. Well, we're already kind of underneath them, but we want to nail down the profit first, make it real, and then we'll worry about recessions and big stock market meltdowns. But there are certainly signs of stress starting to appear as far as I can tell. So I don't know what to do about the inflation data for now. I think we'll just continue to take it one day at a time as always. I personally do not trust the CPI data. I much prefer trueflation as my real gauge of inflation and my real metric to use. But, you know, objectively speaking, in trading and investing, it's right until it's wrong. And it was right. It was right for a very long time. Now it appears to be wrong since the government changed the way they calculate it as well. So it is what it is, right? What do we do? For now, though, I think we can continue to focus on the charts. I do want to talk about Bitcoin because whilst I was away fishing, Bitcoin surpassed silver to become the 8th largest asset in the world. So that is absolutely crazy. And it also surpassed the Swiss franc to become the 13th largest currency in the world. So this is so Bitcoin, right? Bitcoin doing Bitcoin things. You can see this risk metric here at the bottom. Good things usually happen when we switch from blue into orange. And it tells us to keep an open mind about better than expected outcomes walking forward. Another nice look here, as you can see, plenty of space to the upside. Okay, again, it tells us to keep an open mind about seeing better than expected outcomes walking forward. Bob Lucas came out with a nice chart yesterday saying that Bitcoin is showing us this blow off top 4-year cycle, not a diminishing returns type. It's also showing a left translated cycle top possibly before December, and that this is a very real scenario if this does not start to cool off soon. So unless we get 6 months consolidation, 70 to 100k region, then that could open up this build into a super cycle. So if we take a look, right, Bob Lucas is saying that either we are going to have some kind of shakeout back below the all-time high, left translation, and then down into that 4-year cycle low, or perhaps we go straight up here, this one into that left translated cycle top, followed by an extended bear market decline into the 4-year cycle low. This is the path I personally am leaning on. This is the one I think that is the most likely, but there's always the outside chance that we consolidate somewhere in here between 70 and 100k for 6 months, and then that opens up this big push to a right translated cycle top before then a 12-month bear market decline as always. These types of vertical accumulation lead to vertical expansion. Okay, again here, and now where are we? Again, getting ready for that vertical expansion. And it's been a while since we checked in on this parabola, but here we are. Okay, this again fits into my idea of this left translated blow off top cycle. Again, it fits into this idea that we're going to have a little pump followed by a nasty shakeout, violent correction, and then into that final leg higher. And it also fits my idea, doesn't it, with being able to sell the top using a simple 3 trend line strategy, something like this. So one day at a time as always, but I don't know about you, I am very, very, very bullish on Bitcoin. I continue to be very, very bullish on Bitcoin. And take a look at this before we get into the charts, okay? Bitcoin 71k puts us here, which I'll show you in a second, in terms of this model. The upper bound currently sits at 337,000. So here's where we are, okay? Lower bound, upper bound. Now, we just about missed it last time around, but you can see we have touched it multiple times in the past. So if the reason we didn't touch it here was because the Fed had to come in and do all kinds of tightening, I wonder if this time around we could actually make it to the top. Nobody is bullish enough, in my humble opinion. So I'm going to take a look at some charts since I kind of missed all of that yesterday whilst I was fishing. DXY still hanging around, still, in my opinion, on its way down to that 3-year cycle low. Happy days. And Bitcoin doing Bitcoin things, right? Breaking out above all-time high, 73 and change. So this should continue. And of course, we have to keep that contextual awareness that we've got a daily and weekly cycle low somewhere around the 7th of April. So a little push higher, drop into that cycle low, and then blast off, I reckon. Gold doing gold things, isn't it? So going to try and find a daily cycle low in the not too distant future and then get a bounce out of there. The stock market clearly does not care about CPI, right? Which is pretty funny, okay? The stock market doesn't care, so why should we? Continues to do more or less what this yellow squiggle suggests for now. So we're getting into that neighborhood where we're going to find out whether or not I'm completely wrong about this, or if I'm right about this, and I think I am because cycles are cycles, right? We should expect this daily cycle to start to top in the very, very near future, and then we should get that shakeout and that pullback into the daily and weekly cycle low. So interesting times ahead. NASDAQ kind of following the S&P, and the Dow Jones even completing a breakout with a hard right edge. So we choked the stop up to manage the risk whilst I was away fishing, and we didn't get stopped out. So long and strong continue to push. Let's see if this can continue. Russell 2K above all critical supports. Happy days there. And let's check in on these crypto related equities. Coinbase still holding support, okay? Keeping it nice and simple. MicroStrategy also still holding support. Keeping it nice and simple. Riot, we've had to pay a stop here, so that's fine. We can get rid of these positions, go back to neutral, and wait for that 60-day cycle low. I will probably be focusing more on strength if that's the case, but for now at least, let's see what the market will give, see if we can get a nice setup to get back in, or indeed to let this one go and focus on the other ones like Marathon and MicroStrategy. Speaking of Marathon, here is Marathon. So back testing the range, okay? Breakout, back test of the range, still above the blue support. Long and strong continue to push. Let's see what happens from here. Overall, as you can see, not a great deal has changed, right? We're long, we're strong, continue to push. We'll see what the market can give. Obviously, inflation is an ever-changing thing, so we have to keep monitoring that, keep an eye on that. But as it's becoming more and more of a theme on this channel, the longer I'm a trader, the less attention it seems to be worth paying to macro and to the data, and the more attention should be given to the charts and the charts only. The charts don't lie, the charts can't lie, right? And so I think the best thing to do is just continue to focus on the charts, take it one day at a time, and we'll see what the market can give. I'm your boy Camel. Until next time, take care from me. All the best. Cheers. Bye.